All right. Good evening, everyone. It's Tim Davis coming to you guys with my early weekend market review. This is Friday evening, December 23rd, 2022. Want to get it out the way while I had a little bit more time on my hand. We'll start out taking a look at the S&P 500 weekly chart. And I want to point this out just so folks will see, even as we approach the end of the year, that we are still in a downward trending market. We're in this downward trending channel. As you can see, the highs of the market, and we've been creating these lower highs along the way over the course of the past year. And every time we've got to that point, we have found a way to pull back. So I wanted to point that out just to clarify that we're still in this bear market, regardless of what kind of rallies we see, especially as we approach the end of the year. Still in this bear market, and eventually prices will continue to trickle down until this bear market is over. And I don't think we nowhere near the end yet, especially when you have analysts saying that the recession has not started. Normally, we don't bottom before recession starts if this recession hasn't started yet. So again, this is the longer aspect. We are still in this bear market, and as you can see, this red line, which is my 50 per moving average, it is starting to take a slight curve, and it'll probably start to follow prices downward as well. So that's food for thought. We are still in the bear market, and doesn't look like that is ending anytime soon. Now, for the here and now, and a lot of folks listen and always this time of the year we talk about this year-end Santa Claus rally, Christmas rally, whatever you want to call it. If you look at current price action by looking at the daily chart, we actually we're actually in a good position to see some type of move higher. Don't think it's going to be anything astronomical because, as you can see, we still have this overhead resistance, which is the downward trending upper trend line. Now, we have hit oversold territory on most of the major markets over the past week. So that does give room for a possible short-term rally. So as you can see, looking at the this is a daily chart, 1-year daily chart, looking at the full stochastics. We're in oversold territory in the near term. REMS percentage is starting to turn up just a little bit, and the CCI starting to show some positive diversion or type of buy signal in the near term. So it does look like we could see some positivity in the market again next week, but I don't think it's going to be nothing to write home about, nothing to say we're in a new bull market, because I think we're just going to go up slightly, maybe even just back to these moving averages, possibly back up towards the upper trend line, but I doubt it. We have to see how that pans out on S&P. But needless to say, this area up here is going to act as resistance, and so will the moving average. 50 per moving average act as resistance. So normally they say the year-end Christmas rally is normally the last 5 trading days in the year and the first 2 trading days in the new year. So we had to say that pans out. And speculation is that the market only moves during that time frame about 1.5%, which is not a lot for 7 days. So keep that in mind. So that's where we're at right now. In the near term, again, overall we're in this bearish downward trending channel. And I think after we see this little possible bounce in the market next week, we're going to be coming right back down. And eventually, I think we're going to come back down to test the lower part of this band sometime in January. That's what the S&P looks like. We switch over, take a look at the Dow Jones. Same scenario. Oversold territory in the near term on the daily, and it looks like we are possibly going to continue to move higher sometime next week. And again, nothing big. We got resistance right around up in these levels. And resistance right around here. So around 3,400, there's resistance. So we could see a nice little move in Dow Jones. So maybe a couple hundred points in the Dow, but it's going to run right into a wall and come right back down more than likely. That's something to look forward to for the people who want to take a quick bullish trade. But again, I wouldn't get too over exuberant because we're not in a new bull market. Just going to probably have a little short-term rally and then right back down goes the markets. Take a look at a weekly chart. Again, maybe a slight little move up next week and then come right back down. We're probably going to break below this upper trend line, back below this upper trend line, probably within the first week of January, as prices start to head back down, even on the Dow. So, all right, let's take a look at the NASDAQ. This NASDAQ is the weakest out of the bunch, so I don't see much of a strong rally in the NASDAQ. Again, the NASDAQ is really muted below its below the 50-day and below this upper trend line. So we could see a slight move up in the NASDAQ, like the other markets. Nothing crazy, maybe a couple hundred points, and then coming right back down. That's the weekly chart looks like. Look at a daily chart. Again, daily chart shows oversold conditions. There's a slight gap in the market right here, so we could see prices possibly rally up to that point. Maybe a couple hundred points. We may see the Dow move up, maybe NASDAQ move up a couple hundred points for the next 7 days or so, and then more likely come right back down to break below this trend line. This right now has been a strong support level right around here. So I think we're going to get this bounce off of this level. So this has been a strong support level for the NASDAQ. And every time we got around this level, we got a little bounce, got a little bounce. So I'm looking for another little bounce. And just a little one. I think this bounce probably be even a little smaller, than come right back down. Let's look at the NASDAQ daily. Again, NASDAQ weekly chart, we are still muted below the 50-period moving average and also muted below the upper trend line of this channel. So any rally is going to be probably short-lived, and we're going to come right back down. Eventually, I think we're going to test the bottom of this particular channel. So we could see a short rally in the markets, then we're probably going to see a big, reversal sometime in between January and February. Here is a weekly chart on the Russell. Again, look at that. Russell ran right up into this October to December, right up to that 50-period. Look what happened, got rejected right there. So we're probably gonna see another little rally back up towards that 50-period moving average on the weekly. Maybe somewhere up there, and then by that time we'll probably see the moving average coming down. So maybe a short little rally over the next couple of days or so before we start to head back lower. It's a daily chart of the Russell. Again, daily chart shows an oversold territory. So again, we could see a rally over the next week or so. Back up to that level, then eventually stall out and come right back down. And one more we take a look at is the VIX. Again, here's a daily chart on the VIX. And if you look at the indicators on the VIX, it's definitely showing that it's looking like it's ready to trend lower just a little bit more. Here's the full stochastics of the VIX. Trending downward. Risk percentage trending downward. CCI also starting to trend back downward. So I'm looking for the VIX to come probably right back down to this level, which is where I think it's going to find some type of support. And once we hit around 20 or right just below 20, it's one around 20 or below 20, I think the VIX is going to start to go right back up. So pay close attention to the VIX. I think the VIX is going to give you a telltale signal when the market's ready to come, when the overall market's ready to go back in reverse. And if we see the VIX get a strong bounce off of the support level, then I think we'll finally see the VIX rise back above the 50-day moving average and probably possibly overtake it and hold it. So look for that over the next 2 weeks or so, the VIX to pop back above the 50-day moving average, possibly in the first week of January, possibly hold that level. So I think that's all I have. We'll take one glance at silver because I think silver definitely has possibly some room to run. It's starting to reach some overbought territory, so I would not be surprised to see a pullback. But I think the overall trend in gold and silver, folks, it is starting to trend up. Silver slowly but surely approaching that $24 mark. We could see a little slight pullback here, but I think this trend is definitely in an upward trending channel. Definitely start to see an upward trending channel in gold and silver. Here's a weekly chart of silver. And it's definitely starting to trend higher. So it looks like we are definitely starting to see silver starting to trade up into a particular channel. That's a weekly chart right there. So definitely like we're starting to trade up in silver in the channel. So keep that in mind. And silver looks that way, then gold probably looks the same. And there we go. Upward trending channel. We could see some pullback here in the near future. But I think this upward trending channel is probably going to possibly stay in effect. All right, folks, that's all I have for you guys for this weekend. Enjoy the rest of your weekend, everybody. Enjoy your Christmas. Happy holidays to your family. Happy Merry Christmas. And hopefully you guys have an awesome Merry Christmas and a Happy New Year. More than likely, I'll see you guys possibly before the new year. Till next time, enjoy and have a great weekend, folks.